If you want to invest and get guaranteed return and tax benefit but do not want to take any risk and you don't know where to invest, then this video is helpful for you. Hello friends, this is your lovely Bhagat, and in today's video we are going to discuss about popular tax saving investment schemes with low risk and moderate risk. So let's get started with the video. First scheme is Public Provident Fund. The rate of interest per annum is 7.1%. Tax treatment will be principal and interest amount qualifies for tax deduction under section 80C. Interest earned is also tax free and the matured amount is also tax free. Lock-in period is 15 years and the minimum investment amount is Rs 500. Second scheme is Equity Linked Savings Scheme. The average return will be 1 year 19.67% and for 5 years 13.39%. For the tax treatment, principal amount qualifies for tax deduction under section 80C. Long-term capital gain at the rate of 10% on gains above 1 lakh is booked in a financial year. The lock-in period is 3 years and the minimum amount investment is 500. And the third is National Pension Scheme for All Citizen model. In this case, 1 year return, Tier 1 equity will be 16.68 to 20.18%. Tier 1 government bond will be 13.43% to 14.91%. Tier 1 corporate bond will be 12.64% to 14.70%. For the 3-year return will be Tier 1 equity 8.17 to 11.16%. Tier 1 government bond will be 11.20% to 12.77%. Tier 1 corporate bond will be 8.87% to 10.41%. For the 5-year return will be Tier 1 equity 13.04% to 15.61%. Tier 1 government bond will be 10.26 to 11.83% and Tier 1 corporate bond will be 9.25 to 10.16%. And in this, the tax treatment will be principal amount qualifies for tax deduction under section 80C and an additional amount of Rs 50,000 under section 80CC D1B. Interest earned is tax free. The lock-in period is up to retirement and the minimum amount investment is Rs 500. Next will be the National Savings Certificate. The interest rate will be 6.8% per annum. Principal and interest both qualify for tax deduction under section 80C except interest received in the final year. The lock-in period is 5 years and minimum amount investment is 1000. Next will be the tax saver fixed deposit. The rate of interest will be 3.50 to 7.50%. Tax treatment will be principal amount qualifies for tax deduction under section 80C. Interest earned is taxable as per income tax slab. Lock-in period is 5 years. The minimum amount investment is 1000 onwards, but it varies from bank to bank. Next will be the Sukanya Samridhi Yojana. The rate of interest will be 7.6% per annum. Tax treatment will be principal amount qualifies for tax deduction under section 80C and the interest earned is tax free. Lock-in period will be 21 years from the date of opening of account or upon marriage of account holder, whichever is earlier. And the minimum amount investment is 250. Next will be the unit linked insurance plan. 5-year returns will be 5.41% to 13.25%. Tax treatment will be premium paid qualifies for tax deduction under section 80C. Interest earned is tax free if the annual premium does not exceed 10% of the sum assured. The lock-in period will be 5 years and the minimum amount investment is 1000 monthly premium. Next will be the 5-year post office time deposit account. The rate of interest is 6.7% per annum. Tax treatment will be principal amount qualifies for tax deduction under section 80C. Interest earned is taxable as per income tax slab. Lock-in period is 5 years and the minimum amount investment is Rs 1000. Also, in case of ULIP, for a policy issued after 1st of April 2012, ULIP premium should not exceed 10% of the total sum assured. For a policy issued before 1st of April 2012, ULIP premium should not exceed 20% of the total sum assured. So friends, if you are that type of investor who does not want to take risk but wanted guaranteed returns, then Public Provident Fund is the best option for you. Cause it comes under the category of exempt. That means the amount investment is exempted from tax, the interest earned is exempted from tax, and the matured amount is also exempt from tax. But if you are an investor who wants to take a moderate risk, then Equity Linked Savings Scheme is best option for you. As equity in the long run, that is 5 years or more, has historically given higher return than PPF, despite the capital gain of 10% is associated with it. At 3 years, Equity Linked Savings Scheme has shorter lock-in period significantly. And those investors who wants to take a low risk can opt for tax saver FDs despite of Public Provident Fund, if they want to take a shorter locking period, because in PPF there is a long locking period that is 15 years and in tax saver FDs the locking period is 5 years. Also, the interest on PPF is higher than FDs, and the tax saver FDs are best suited for those investors who wants to make an investment in lump sum amount and for shorter period, and for the PPF investors who wants to make a low investment for longer period. So friends, I hope I have resolved your queries. If you like the video, then please hit the like button and subscribe to my channel. Till then, thank you.